Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Middle of the week, Wednesday morning, we are coming to you as always from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, morning, folks.
Morning.
So middle of the week, muddling along. At least that's us. But I think the markets had a fine form. I mean, it's not too bad. I mean, yesterday a bit of a pause for the broader markets, but it's been good going, I guess.
I think par for the course, right? I mean, after the kind of run that we had, par for the course, I guess. So let's get straight to the action, Prashant.
I mean, Trump is like, I was thinking the right analogy, right? A kid with like, I don't know, a toy gun or something. And, pointing, I'm going to shoot you. I'm not going to shoot you. I'm going to shoot you. I'm not going to shoot you.
That's a good analogy.
It's, I don't know. I mean, it's...
And on that analogy, CNBC did a CFO survey. And I think over 60% of them are saying that they cannot decide what to do with their businesses because there's just too much uncertainty. Yeah,
absolutely. So. And, let's just quickly run you through, what you need to know. And it's Trump, all Trump. And the thing is, we don't know. We just don't know how large, how the extent of the tariffs or anything of that sort. So markets remain on tenterhooks as far as the 2nd of April tariff headlines are concerned. Chasing headlines or chasing price action ahead of this, into this, I mean, I think just doesn't make any sense. We just don't know, as I said. Now, but what we do know, Trump last night, once again, sort of, he's obviously on the air very, very frequently. He said that 2nd April tariffs are set. I mean, he set them. So they are in there, but he gave no real details. And then this morning, as we were coming in, there was another sort of line which came through. I just want to quickly put that up as well. He said that I'll likely be more lenient than reciprocal, on reciprocal tariffs. So, for example, I'm assuming what he means is, say, X country charges 10% or 20% on US goods. He won't be reciprocal by charging 20%. Perhaps he'll be a little more lenient to the extent of that tariff rate. But, who knows? As I said, lots of comments come back and forth. And one day it sounds more harsh. The next day it sounds a little more lenient, etc., etc. Anyway, the price action. Nasdaq was up about 0.46%. Was up for the third straight day. 10-year yields, nothing very much in macro markets. 4.3 on the 10-year, was down 2 bases. You had dollar index, which stays above the 104 mark, slightly lower last night. Oil prices above 73, but again, no great change. So, I mean, these markets are steady. Copper, I think, is the talking point this morning, again, because of these tariff-related news bits which are coming in. Prices last night were up 2.5%, and they were on their way to an 8-month high, and I think they've moved up even more this morning. And we'll have Manisha talk to us about commodities, etc. in a bit. In terms of data, and this is, I think, the consequence of the uncertainty that we were talking about earlier, the Conference Board's 6-month expectations have fallen to a 12-year low, while 1 year ahead inflation expectations are at a 2-year high. And this is the, stagflationary kind of situation. Remember, about a year ago, Jerome Powell was asked about stagflation. He said, well, I don't see stag or inflation. But I think now this has entered the mainstream talking point. Now, Philly Fed non-managed, the services index also slumped. That came in the lowest since May of 2020. Just a quick bit on what markets are pricing in. The markets are pricing in a rate cut, fully pricing in a rate cut in July. For the full year, about 62 basis points worth of rate cuts are what is priced in. Reports that Russia and Ukraine have agreed to a ceasefire over Black Sea. And of course, Trump was also on the record saying that, well, he's in deep conversations with both sides to resolve that conflict for good. Just the levels now, and I said this yesterday in the morning as well, maybe a little bit of a pause because of the April 2nd event which is in front of us, and of course the big rally that we've had from the lows. Yesterday the Nifty crossed the February high of 23,807, but we could not close above it. So that becomes the first resistance, 23,807. And then yesterday's high, which was 23,869, are levels to take out. On the downside, the 20 hourly has been pulled higher. That number stands at 23,577, and then the 40 hourly exponential, which is 23,322. For the Nifty Bank, it looks like a little more tricky. The reason I say that is because we crossed the 61.8% retracement, which is 51,883. We did not close above it. But forget closing above it, we actually ended lower on the day. So have we completed something on the Nifty bank from the lows to the highs? The question, we don't know the answers to it yet because we are above these averages. The 20-hourly, 51,322, and the 40-hourly exponential, which is 50,634. So maybe a little quieter. FIIs have been buying loud, but the market price action was a little more quieter. We'll see. 60 points higher on the GIFT Nifty is the indication this morning once again. Surabhi.
Okay, well, Asian markets right now, they were a lot happier in the morning when they opened up, but now as the session progresses, they've kind of cooled off a little bit. They were happy, obviously, because of, the expectations that Mr. Donald Trump may not be very, very disruptive come the 2nd of April. So that's what you've got. You still got some green. The mainland Chinese market has dipped into negative, but otherwise most of the regional markets, Japan, Singapore, Hong Kong, all of them are still very much up and about. On currencies, just a word over here. Over the last couple of days, the yen has gone back to its weak ways. In fact, even this morning, the dollar yen, as you can see, is trading above 150. So the recovery on the dollar that we've seen last couple of days, today included, the dollar index is still very much above 104. That's meant some weakness coming back to the yen and to an extent to the euro as well, but more on the yen. Anyway, just to talk about oil, because for India, that's one issue. The fact that quietly Brent has now inched up from 69. Remember, it was sub 70 just a couple of weeks back. It's back up to 73 plus. And that's because of the fact that the oil market is still very worried about Venezuela. Those are the prices on our screen. As you can see, almost 73.30 right now. There was good news on that Russia-Ukraine deal, which the US has successfully managed to broker, at least a partial deal on the Black Sea. So what they've said is that they'll allow a safe passage for navigation for ships around the Black Sea, and they won't attack each other's energy infrastructure. So this has been done, this partial ceasefire. But the market, like I said, is still worried about how many Venezuelan barrels go off the market. Iran has fresh sanctions, so how many additional Iran barrels are not coming to the market? So that's keeping a bit of an upward bid on the price. To talk about our market here, 7 winning days for the Nifty. It's been a fantastic streak, though, of course, yesterday the broader market took a bit of a pause. And that's after 6 days of a rise on the mid-cap index. By the way, the cash market volumes yesterday were up 13% above the 10-day average. So there's some more activity that's picking up as obviously the market recovery is gathering steam and momentum. The flows, no complaints here whatsoever. Once again, third day running a solid 4-digit buy figure coming in. Over 4,300 crores of buying from foreign institutional investors explains why the large cap market was doing so well. Domestic institutions were on the sell side again yesterday. Sold off stocks worth about 2,770 crores. Lots of stocks in focus today, and plenty of deal action could be in focus as well. These two companies, now both of them have a board meeting. Whether there's going to be a deal or not, we don't know right now, but these stocks need to be watched. Earlier, M&M's name was in the fray. Now, Ashok Leyland's name is the fray, so let's see if there's a deal brewing over there. NCC's backed a massive order, over 10,000 crores of an order, so that's a stock on the radar. And finally, the Siemens sort of demerger, that's continuing to chug along. It got the NCLT approval yesterday. Energy business will be demerged into Siemens Energy India. So we'll have 2 different listed Siemens entities soon. So plenty of corporate action as well. Global Q is not that bad this morning.
Well, that's right. But what about the FI buying?
Solid.
Seems they are in love again with the Indian markets. 20,000 crores in 4 sessions. And even after these kind of inflows, they're still net sellers in the month of March by close to around 7,000 crores.
Because of the earlier selling that happened.
Let's see whether or not in the next few trading sessions, they could possibly deliver a net buy number for the month of March. That's the hope. Let's see how it goes. Well, but the call was for some consolidation yesterday's trading session, and very rightly so, right? Because some of those technical indicators were indicating that. The PCR had moved to around 1.3 or thereabouts, which was at the higher end of the range, 1.2, 1.25 intraday yesterday as well. The RSI as well, that had moved to around 70, which typically suggests in the near term maybe a bit of an overbought zone. And the India VIX as well had perked up. So these indicators, well, they call for some kind of consolidation. What do the FIs do? They're showing us the big money in the cash market. We like it. What are they doing in the F&O market? Well, they seem to be covering some shots, and that's been the trend. Even in yesterday's trading session, close to 3,000 contracts were covered out. The net short positions continue at around 67% or thereabouts. And this is the power of short covering. Because in a matter of few trading sessions, they have halved their net short contract. Just take a look at that. From around 1.8 lakh contracts to around 90,000 contracts. But the clients, they're the ones that have been getting it right. They have been, buying into this market. They had their long positions that were at very, very aggressive levels. And as we saw the market bounce, well, they've gradually been scaling down their long positions. So in the last few trading sessions, as the FIs cut their shots, well, they have unwound some of their long positions and booking some profits as well, because it's down by close to around 1 lakh contracts, from around 1.39 lakh contracts to around 38,000 contracts or thereabouts. Well, moving to the options data, it's going to be important because tomorrow we'll have the monthly expiry that will play out as well. 24,000 call, 23,800 call gives you an indication that the bears want to go ahead and defend the 24,000 odd mark. And that's pat in line with where the 200 DMA is at. So that's going to be the important resistance mark. The recent high that we have seen, 23,870, and the 200 DMA. Crucial resistance zone. Only once we get past this, you'll be banking on that we see a further breakout from here on. In terms of support level, going by the options data, going by where you have the DMA as well is at, you'll say that around that 23,450 becomes the important mark. Yesterday's high becomes important on the Nifty Bank. We did a bit of a U-turn, so that becomes the near-term resistance. And you have the 200 DMA, which is a support zone as of now for the Nifty, the first level of support. As we speak, the Nifty Bank yesterday closed somewhere in the middle of this range. But the IT index, was it a flash in the pan, or are we good for more? Because in yesterday's trading session, we had made this point yesterday that the Nifty IT index could possibly try to pull back some of that underperformance. And that's what happened yesterday, because the index was the outperformer, and it's ended closer around the 20 DMA. So I'll be interested to see whether or not it's good for more. Stocks that I'm looking at, well, there's buzz of a deal, because yesterday, towards the end of the trading session, we had Ashok Leyland that had put out this notice they're going to be having a board meet and they're going to be having an investor call as well. And, various sources from Money Control indicate that maybe there could be a deal in the offing. So we'll have to see how that goes, whether there's a deal, whether there's something with regard to the group that they want to do. Ashok Leyland will be the stock that we'll be tracking in. And since the report indicates, SML Isuzu is the other one that we'll be tracking.
Okay, all right. So lots to track and lots of individual company and stock level action as well. Let's get started then with the equity call of the morning. Rahul Jain of Goldman Sachs says that while their strategy team also believes that the worst is likely behind us in terms of economic growth and earnings trajectory, and prices have corrected meaningfully, they see higher market volatility in the near term, given still elevated domestic positioning in small and mid caps and ongoing global uncertainty from tariffs. Consequently, he adds that they remain market weight on India within an EM context and recommend focusing on quality growth and earnings visibility. He says the top 10 ideas that offer 23% upside on an average include HDFC Bank, AU Small Finance, M&M, Make My Trip, Interglobe Aviation, Adani Ports, Power Grid, Apollo Hospitals, Titan, and GCPL. Lots of interesting names across a range of sectors there.